Hello, mic test, mic test. Mic test, mic test, mic test. Hello. Hello. Well, it is working now. Let me see if the stream is working on LinkedIn while we load up the. Oh, it is seemingly working. Some minor issues we are having. Let me see if it's working well now. Hello, mic test, mic test. Yes, working. That looks like LinkedIn is also working. So hello guys and welcome to our 125th edition of the Trading Opportunities webinar. This is Nirav and let's just first of all continue with our very quick introduction. So these are what we just mentioned, the series of webinars called Trading Opportunities. We have been conducting them for quite some time on a weekly basis every Friday, and the timing has always been the same: 7:20 p.m. IST, 7:30 p.m. IST. I mean, or 2 p.m. GMT. Right. In the past 124 webinars, we have captured a total of 312 trading opportunities. Of course, all of them were discussed live in front of you guys, and many of you have been joining me live, and some have been watching. Many have been watching actually after the stream is complete as a video. Right. Apart from this series of webinars, I am also the author of the book Think with the Markets, available on Amazon's Kindle edition. And one second. Yes. So, and other than that, let me just give you a quick rundown of the other things. I am also the author of the course, The Complete Guide to Professional Trading with Elliott Wave, which is available on Udemy platform currently. You can get the link from here with all the details and an added discount. It has, I think, 1600 something plus students. If you are not interested in learning the whole thing, then I highly suggest you check out the free course, which is available as a link in the description of the YouTube video, where you will be able to decipher the basic concept so as to be able to understand the discussions from these webinars. And one more thing, here is the forecast accuracy as we always like to show them. A track record of all my work since 2016. As you can see, we have had a constant accuracy of 80% plus over all these years. And all of it is publicly available. Anyone can verify it. After 2021, we started doing these weekly series, which, as I mentioned, we have captured 312 trades. Still needs to be updated here on this page. That's about it for our quick introduction. Lastly, those of you who are interested in getting all the updates from me and any new content, private content or course or book which I publish, you can subscribe to the emailing list by visiting this link. And lastly, those of you who are serious and interested in learning the concepts of advanced Elliott Wave directly with me on Zoom calls are more than welcome to make inquiries for the training program LT. Currently, we only take students from my video course. That is, the people who have completed the video course are the eligible students. So if you are one of them and are interested in taking your knowledge to the next level, you can send your inquiries here. Right, that's about it for our quick introduction and announcements. Now let's get back to our webinar. One thing, this is a sequence: Euro USD followed by crude, gold, SPX, Nifty, and then BTC. Four of the setups we discussed in this 124th webinar, which was conducted last week, have played out. We will see all of them in sequence while we discuss these charts. And that's about it for our introduction. Now, if you guys are available in the live chat, I would very much appreciate if you can let me know if the audio and video is working fine while I'll check. Yes, at my end, it looks to be working. So I will not be delaying the broadcast anymore. But as I said, it is much appreciated if someone from the live broadcast can also verify the same. Yes. Now coming back to our current discussions, we will go over the chart of EURUSD first, but let's very quickly have a glance at what was being said about EURUSD in our last webinar. Here is the chart, and we had two basic hypotheses. Let me the video first mute it and then see what was being said. Yes, so discussion ended somewhere here. The discussion basically was that both directions were possible on Euro USD. We were looking at a complex possible correction or a triangle in play, and there was a clear short play only and only, but it was uh, near 1.0677, which was quite far away from our price level at that point in time. So it was a wait and watch market. It still is. I don't still have any trade on euro, but let's look at it from an analytical point of view and see what the market has to offer in terms of any new setups. So here is the live chart of euro USD, and as you can see, let me just zoom in a little bit. As you can see, we have this trend line, this red trend line, which is currently being tested. And the short setup was that if the market goes below this alert, below 1.067 something, then we will be interested in selling this or looking for shorts in this market, right? So that is still there, still intact. Nothing is triggered. As far as the bullish count is concerned, this trend line, if the market takes support on it and then breaks out this upside level of price 1.0935, then we will be much appreciating the possibilities of an up move or a strong up move as represented by this CN count. And if I remove all the stuff from the screen, this is the count we are expecting if the market heads up as per the CN count. So we are expecting an impulsive progression. And as I mentioned, if we take a support above the trend line and then break above the 1.0935, we do have a short-term long setup here. I wouldn't call it confirmed or anything. It is still not a very strong setup. So I'll personally will be looking for smaller plays or what you call smaller size positions on this market if this count is triggered. And as I mentioned, the bearish count is there, but the entry level for it is quite low. So not much worth discussing in this market. As a matter of fact, it's kind of still a wait and watch market. But these are all the points which I had in mind. Let me see if the chat is even working. We had some settings changed during the broadcast. And let me see if chat is live. Okay, thank you, Matthew, for finally confirming. I just posted a message at my end just to check if it was working or not. All right, guys. So let's now move over to our next chart of crude oil, where things have changed a little bit compared to what we were expecting. And let's see that change of reality from our expectation by heading over to the discussion, which was somewhere over here. So first of all, we are looking at the last webinar's recording of CL. And as you can see over here, we were discussing this market with the perspective that there is a down leg remaining. And once this down leg is complete, we will look for long plays. The structure for the downside was A down, B up, C down, zigzagish, flattish kind of structure. We will have to check the exact values, but yes, it looks like I have taken it as a zigzag in the right side here. So, anyways, we were expecting a C leg which will take the market lower than 80.80, and once the C leg is complete, then we can look for longs. We can either build up, or the second setup was we look for breakout longs above 83.60. However, what happened is the market has gone down, but much faster than our expectation. So here is a chart of crude oil live on screen, and let me just remove everything and show you what's happened. So last time during the discussion, the market was it was 19th July, and the timing was, I guess, let's just check the actual chart. So the market was trading around 82.002, and here is the live chart. Let's see where is 82. So here, somewhere here, the market was, right. Our count at that point was that we have A, B, and a C leg. So as you can see, so far the count has worked out, but I'm not counting it as a +1 or with our regards to our setups which discussed in the last webinar and have worked out. We are not counting it at all, and the reason being that the fall is much deeper than expected, and I did not personally take any long trades here, because the perspective now is, let me just squeeze the chart and give you a view of the longer time frame count. So here what we are thinking or assuming is that there is a possibility that this market is continuing as a possible triangle. Now, this is not the only count I have. There are some other scenarios which are suggesting more sideways and then up before any further down move. But keeping our discussion brief and more focused towards our current price, what we have is a possible triangle, and in a triangle we have 5 legs. They are labeled respectively as A, B, C, D, and E, as you can see with the yellow markings or writings. So as soon as these 5 legs are complete, you can see the market sort of is reducing its range, sort of narrowing down. So if we draw the trend lines are also narrowing themselves, right? So basically what we look for in a setup like this is the end point of the move, which is the wave E of the move. And once the wave E is complete, we expect a breakdown, right? The breakdown can be traded in multiple ways. First is that we wait for a break of this trend line, the BD trend line. So if the market goes below this, we consider looking for short trades. Second is a little bit more conservative approach. We wait for a break of the D, wave D low, right? So both of these setups have not yet fired themselves, right? So it's a wait and watch market, with the main criteria being that if one of these setups is fired, I'll look for possible short scenarios. Might as well enter some shorts here as well, but I don't have currently any position on it. And pretty much that's about sums it up for crude oil. The other ideas are that this market is just continuing in a sideways progression, and our estimate of a triangle is incorrect. And this minor leg is something else, maybe a complex count or something. I mean, you can count it as a W, X, Y. So in that case, it may have a minor down leg, but will be followed by a strong up move. So on and so forth. Multiple counts are possible, and that is why I said that the triangle looks likely, but we will still trade it with caution. The idea is clear, but keep in mind the other scenarios. I'm not going to discuss the other scenarios more in detail because there are 3, 4 of them, and it might become a little bit confusing. So at this point, it's a wait and watch market. We kind of leave it and see if 1 or 2 scenarios clarify themselves to later on be allowing us to take a short or possibly even a long trade. So that's it for CL. Again, do keep it in the watch list. I believe it may become clear within 1 or 2 sessions, maybe more. But whenever it does become clear, it can give us a clear setup or a clear move. If you guys have any doubts or questions in the discussion so far, you can just post it in the live chat. Those of you who are there, and I'm seeing the participation today is exceptionally low. But anywho's, we'll just move over to our next chart of gold, which has moved down as per our discussion from the last webinar. So first of all, here is the recording from our past webinar on gold, and let's see what was being said on this chart. Somewhere here, yes. So here we have the main idea in yellow count, as you can see. The idea was that we are seeing a wave C progression in the downward direction within a flat structure. A flat Elliott wave structure is what you can see on the bottom right hand side, a wave down called an A, B to the upside, and then C down again within the price territory of A. Completing the leg down will mean that the correction is over and the market is ready for takeoff. So that was the count, and we were expecting that at least one more leg is remaining. And the secondary idea was that more than one leg is remaining, two or three perhaps, in which case we would have a nested formation and even possible diagonal, right? So whatever the case may have been, the main theme was that we will look for short trade setups. And now let's look at the chart. Keep in mind the price at the time of discussion was 2401. So now let's head over to the actual chart here. And here on screen we have the chart of gold. So 2401 was the price, and you can see the market is now at 2386 after taking a low at 2352. So roughly speaking, 50-ish points we have seen the move, right? And what is the count now? The count now, I will have to update this by the way. So now the count becomes, let's squeeze it. Here is the point of reference. Here is the wave A, possible B here, and the second review I am sensing here is the first is that C is complete here, in which case we can see a straight off takeoff of this market. We'll call that an H2. And the another view I am sensing here is a possible diagonal in play, an ED or an ending diagonal. So in this case of ending diagonal, let's call it the H1. We are expecting one leg down and then a move up. The leg down will be minor, something like this, right? And H2 is straight off up. Yeah, can't change the colors, but let's leave it as it is. So long story short, we are expecting some continuation of the move to the downside before takeoff as our primary view. Secondary view is just a straight of takeoff. For the secondary view, we do not have a clear setup right now, but I will be interested in longs above 2413. And both of these scenarios are suggesting longs in a swing perspective, and they have a contradiction on the shorter time frame perspective, but on a swing perspective they are pointing in the same direction. Lastly, the invalidation will be if the market goes straight off below like 2298, or let's just call 2300. Below 2300, we can say that this market is possibly doing something else. It still does not invalidate our count to the upside, but the chances of it working out become kind of low. So consider this as the invalidation level for this count. Nothing much to add here, and I'll continue to track this market in our Slack group, of course. And if you are not aware, we are tracking and trading all these markets in Slack, plus a lot of other markets. We had we have live coverage for these at Push My Trades here, etc., etc. Those who are interested can find the details at the bottom of their screens currently scrolling, or in the description section of the YouTube video. That being said, let's now head over to our next chart of S&P. But yes, guys, those of you who are here live and those watching later on as a recording, if you are enjoying this content, finding it of value, I request that you kindly do share this content so that we get more views and are able to reach a wider audience so as to continue doing this work for you guys publicly. It is of much importance because after doing what is this 124 complete webinars and 25th right now, we still are not crossing 1000 views consistently. So your continued support is extremely required at this point. And if you have access to Slack, Discord, WhatsApp, or any other such kind of group of traders, like-minded peoples who would be interested in this kind of valuable analysis, then kindly show your support and share that consistently. Right. With that being said, let's now head over to our next chart of S&P's 500. And as always, we'll just first look at the recording from our last webinar and see what was being said about S&P in the last webinar before continuing with our current discussion. So somewhere around here, we were discussing S&P. Let's see what was being said. So there were two basic views we discussed. One was that the impulse is continuing. Second was that the impulse is complete, which was a little bit more bearish. And both of them were suggesting what do you call confluence, that this market can test this level. Let me play this video. Yeah, the secondary level was 5396. Possibility of further downside was suggesting market going to 5260 ish level. I mean 524030. We don't exactly know it. I'll have to check it on the actual chart. But the main view was that 5396 can act as a support and was an important level, as is pointed out with this yellow oval. But even the primary scenario, which you can check by going to the actual last webinar recording and checking it after 22, we had a long discussion till 32. So even the primary scenario was suggesting that we were going to have a correction pending here. So anyways, so that is enough of our discussion from last webinar. Here, let's check the current chart. So here's the current chart right now on screen. Looks like we are seeing a delay in these webinars. Hmm. So here's the current chart on screen, and what we have is 5396 already kind of tested here. You can say 5400 is the low. So I would say that our levels are 1 second actually. 1 second. 396. Yes. So kind of very near to our suggested level, and the market is already gone sort of there. So this one also worked out as per our analysis. We were actually tracking the whole movement and were able to predict this thing. And then I was able to capture part of this move down. Actually, some scalps here. Let me see if I can pull the Slack posts here for you guys very quickly and show the live trades here. So here are the posts. We were tracking this market. Here are some shorts taken on 24th July, added shorts, booked profits on shorts. And then again, we have added shorts and then booked profits on shorts. So these were all the trades which were posted apart from the analysis, which I continuously update. Again, those of you who are interested can find the details at the bottom of their screen or in the description of the YouTube videos. Now, continuing with our analysis, we have what you call a possible ABC structure here. Now, the interesting thing is that even though we have a low established here, the low has been retested, kind of almost the market went to the low. It did not penetrate it, so it is possible it has made a wave 2 here, but I'm kind of not very sure about it. It is possible that we are just seeing a continuation of the C, perhaps as a diagonal, perhaps as some other pattern. We don't really know what pattern it is, but main theme is it is possible that this leg down is still pending and can have at least two legs like this. So third and the fifth here. So long story short is S&P is still not out of the woods, and there's a possibility that the bears can still take control of the market for at least a small amount of time, if not too much. That's the main theme here, as you can see represented with the counts on screen. Now let's look at the downside targets. We are looking for 5305 followed by 5217. So this is the downside region. Let me push it on the screen. Right. So this is the downside level we expect this market can take if it continues to the downward, continues in its downward pattern. Now here is one more thing worth noting, that if this is not actually a corrective structure heading in the downward direction, then this can also be taken as a 1 second. This can also be taken as a 1, 2, 3, 4, 5, basically an impulse in the downward direction. However, I'm not sure if this is a 4, but a nested formation is also possible here. So long story short, it can turn much more bearish than expected. Instead of just a minor leg to this level, we can also see a fall heading even lower than this level. So that possibility is open because the market has given us what do you call structure like that. So remain cautious on this counter. Those of you who are not much experienced, I suggest stay out of this market or just engage in smaller position sizes for shorter periods of time. Now let's head over to our chart of Nifty, which will be followed by our last chart of BTC. Here is the recording from our last webinar. Let's see what was being said about Nifty in the last webinar. Yes, so there it is, Nifty. So as you can see, we were expecting a downward movement on Nifty. The idea was that we can have minor pullback for wave B, which will be followed by one more down leg. And in this case, we had some targets marked. Let me play the video and see if those targets can be were written out on the screen or not. Yes. So we were looking for 24,350 followed by 24,020. Now let's head over to the actual chart. Here, right here on screen. So we did touch the 24,350 low. The market did take support over here, as you can see. That is the 350-ish low, roughly speaking. The market has taken support and then broke through it. 24,020 was never touched. The market did go not very near to it, but it did go lower. 020 would be a little bit lower than this, somewhere here, right? So far this market has actually worked out pretty much as we expected it to, and there was also this pullback, and there is also that classical setup. If you guys remember, I mention it quite often enough that if the market is giving a pullback right to the trend line and takes a resistance at the trend line, this gives a classical sell setup, which we did encounter and which was actually discussed. This pullback was a possible discussion, a possible movement which we had discussed actually in the live webinar. So did work out quite well for us. Picture perfect, I would say. Now coming back to the current analysis, there is not anything complex here. Quite simple. We are expecting a possible impulse or a correction in the other direction. If it's a correction, then it's most likely already complete. If it's an impulse, then of course it will continue to move more upwards. The current idea suggests that we can, from this point of this price on the chart, if we see movement below this orange trend line, then we can see some sideways movement, which can then later on see further upside. This sideways movement is what we expect is a wave 4. And what is more important is the upside targets, which we'll look at right now. Upside targets, the most immediate target we are expecting is the price level of 24040. Sorry, 25040. And then other upside targets are also possible, but we are just interested in the most immediate target, right? So 25040 is the most immediate upside target if we see corrective structure for wave 4. And it is also, by the way, possible that this market just gaps up above this trend line and then touches it straight off. That's a thing which I have seen quite common in strong bull markets. So in that case, of course, we'll miss the whole setup and everything. But I mean, it is what it is. Let me just quickly check if we have anything worth checking out. Okay, still no comments here, but okay. Okay, guys. So not a very involving what do you call? Is it even going live? To join live. So give me a few moments, guys. I'm checking if our LinkedIn feed is yes, it is working. It is working. Yes. Okay. Coming back to our webinar, what I was suggesting was the setup for Nifty is long only, and if we see gap up above this trend line and touching around 25,000 plus levels, then we possibly will not be able to take this setup in our live trades. That being said, I guess we are all done with our main charts. Only the last chart is remaining. Let me just quickly see BTC, and with that, we'll end the webinar. So here we have the last chart from our past webinar. Hello, Rockford. Nice of you to join us finally. So let's see what was being said about BTC here, somewhere here. Let's just play it. So here's the setup on BTC. Let me zoom into the screen. And what was being said was wave 3 up, 4 down, and 5 up. Basically, we were expecting a long setup on this counter. And the idea was that this market will take out this last high, whatever this wave 3 high was. So eventually, it did go higher than that. There's no doubt about it. And so this setup actually did play out. Nothing very unusual about it. It was kind of implied in the webinar itself that it's too late to discuss the setup. But anyways, it's our job to discuss everything which was being said. Here is the actual setup. We were discussing this market somewhere here, and the idea was it will cross 66150 and touch this upside resistance line as the common target area. It did all of those things, went above 66150, touched the upside trend line, this CN color trend line, and completed the wave 5 here, after which it looks like this market is continuing as C. I'm not very sure about it at this point. It is either possible that this C is complete, or it is also possible that this C is still having some more upside movement remaining. Now, how will we decide all that? We'll decide it simply based on the breakout. If the market breaks above 68,407, keep in mind, guys, the ticker I'm using is on the top left here, and each ticker may have a small variation in price. So you need to be mindful of that when you listen to these targets and levels. So if we see a break above this level, then we expect two more legs in the other direction, right? That is the general way these markets are expected to progress. If we do not see a break above this level, 68407 on this ticker or data feed, I should say. Yes. So as I was saying, if we do not see a break of this, then this setup does not activate, and in which case this market can actually go lower. Right. So remains to be seen. Wait and watch market level I have identified and told you guys, and the likely progression as well. With that being said, we are all done with our current discussion of this webinar, and all of the participation was quite low. I hope you guys who are watching it later on will be sharing the content and obviously hitting the like, etc., so as to increase the visibility of this content on social media platforms. Right. Thank you for joining in, and I hope to see you guys in the next webinar. Take care, guys.